Gina, disappointing here for FedEx, down 4% after hours.
Yeah, I mean, I think, the market was looking for something different, and so much of it was already priced in for FedEx. So they were really running up against valuation issues. If you look forward, it's not necessarily poorly valued, but there was just so much movement kind of anticipating this number that, it was bound to correct with any disappointment.
Mike, your first take? It was priced high into earnings.
Yeah, I mean, obviously the gains moderated this year, but I think maybe the guidance is not a huge incremental boost to what already was in consensus. And if I'm just looking at it cosmetically, that would suggest. Plus, you have to remember, what did we go through last earnings season? The reflex is to sell the news almost always. So it does seem
is that what we're in for again?
I don't know if we have to be, but I think expectations are already so high just with the published estimates that, perhaps we are. And, these are oddball quarters in terms of the fiscal year.
Steph, you kind of called this a little bit with UPS earlier in the show.
Yeah, I mean, look, FedEx needed to do $21 to $22 in terms of guidance, right? And they fell a little bit short against very high expectations. Look, it's not that expensive. It's 17 times forward estimates. I mean, if you look at UPS, that's trading at 22 times. And I just kind of feel like a lot of good news, though, is priced in. It's up 17% on the year. UPS is up 22%. We've had a nice move. The stories have kind of played themselves out. The disappointing piece of FedEx to me, it must be the margin side. I haven't seen them. And so we want to hear about margins, and we also want to hear about their pricing strategy in parcel growth. So those are the two hot topics on the call to listen for.
Just to broaden it out, Mike, the Dow Transports Index, which a lot of people have been watching because it's been super strong for the first half of the year. I think the best first half since the 90s. It has come off of those highs. Any worrisome readings there as for what it could portend for the market or the economy?
I don't think there's anything worrisome beyond what we already know we're dealing with, which is a deceleration off of the peak acceleration. A lot of the high friction kind of bottleneck stuff that, yes, is helping pricing power, but also is really complicating backlogs and delivery schedules. And the airlines are, 10% off their highs as a group, which is nothing terrible. Their enterprise values are way up toward peaks. It's just that we got there in a hurry at the moment of maximum reopening momentum, and I think it was just backing off from there.
Gina, final thoughts. What's your balance between U.S. and overseas equities at the moment?
So right now, obviously, U.S. has been the place to be, partially because we have been really hitting it on the vaccine front, reopening the economy. But I think sort of as you follow that vaccine story, that vaccination story, I should say, I think that we're going to start to shift towards places like Europe, hopefully eventually Japan. And we think that that's going to be the next place to start looking for interesting ideas. And then sometime next year, we'll be looking at the emerging markets. But I think you need to follow the vaccinations.
Shepard Smith here. Thanks for watching CNBC on YouTube.